Hello and welcome to Business Today. I am Siddharth Zarabi, and with me today, Vaidyanathan, the MD and CEO of IDFC First Bank. Welcome to the show. And let me begin by asking you about your latest numbers. Very good numbers, really. Overall, significant improvement. And given those numbers, what do you see happening in the year going ahead?
Yes, we are very happy. I think last 3 years, we have addressed, I think, most issues. Now, liability side is very strong, CASA 50%. Asset side issues are all sorted. So I think now it's time for growth.
Where will that growth come from that you're talking about? Because that sectoral sort of split should also tell our viewers about the overall sense and direction that the economy is headed in.
If you want to come from the context of how the economy is moving, we are finding that that there is a very strong demand for credit at the mass people level. Basically, if you notice the country, the way we have run for the last maybe 70, 80 years, that credit from the banks was always available to the large corporates. And therefore, with credit, they grew. But people below the line were all operating on equity, I mean, just the personal equity. So for the first time, they're beginning to get credit. So it's so credit starved there that the demand is actually coming from that side. So that's when you see most banks reporting on the retail side a growth of 20%, even large banks with the loan books of 4-5 lakh crores. They're all growing that at 20%. That's because there's so much of a strong demand there.
Mr. Vaidyanathan, can you expand on how you have re-engineered that part of the book that you were just speaking about?
The yield on that book on the retail side, because it's also credit starved and all that, is quite good, and the margins are very strong on the retail side. And more than margins being strong, the asset quality is very stable and very predictable. Even in the when demonetization happened, temporarily there was issues, but things normalized. Then GST implementation happened in 2017, normalized. Then the NBFC crisis came in 2019. Retail book behaved well. Now COVID has also come and gone. Now also after COVID, NPAs come down to 2.5% after gross, and net is even 1.1% after COVID also for our bank. So it teaches us one thing, that crisis or no crisis may come and go, but the end consumer always pays the money moment the cycle becomes better. So I think that is the key takeaway for that.
So what are your expectations for provisioning for the current financial year?
Yes, if you see our provisions for the last 3 quarters, Q2 provisions were lesser than Q1 FY22. Q2 was better than Q1, Q3 is better than Q2, and Q4 was lesser than Q3. So you can see provisions are coming down every quarter for the bank. We feel that overall basis, provisions for FY23 will be lesser than the provisions of FY22 also, like by order of magnitude. And we are now guiding for credit loss of only 1.5%. We are confident about that. We feel that asset quality is truly improving in the country. All collection numbers, everything is saying that. And bureau records are also saying the same thing.
Since we are on the issue of interest rates, I want your comments about that. It's clear the interest rate cycle has changed, and the RBI will do whatever it feels is correct. What's your own sense?
Yes, it is pretty obvious that that interest rates will be rising in the country over the next year or so, and people have to factor for that. But my experience of 2008 also, or 2007-8, when interest rates suddenly rose in the country, typically banks end up, increasing the interest rate but extend the tenor of the loan, such that the EMI roughly remains the same. So I think we have to get used to the cycles, and this is one of them.
One of the other facets about the current cycle is high inflation, and the response that will come from the monetary authority. What do you see happening as far as this is concerned, and do you see an impact playing out on the consumer side of things?
So that's what I pointed out to you, that in terms of consumer demand, I feel that the demand will continue to remain strong in this country, because like I said, at a grassroots level, people find that the payback on loans is actually quite strong. I'll give you an example. If you're a farmer and you're taking some input credit for purchasing, say, fertilizers. Now, with that fertilizers, you're producing your crop. So there is a direct productive benefit for that loan that you're taking for your input material. And the payback is not in terms of interest rate, it's like very high. Similarly, if suppose money has been availed by a student to have an education loan, the payback on that education is a lifetime benefit. It's not about whether you pay 8% or 9%. So the credit enables, a transformation of people's lives itself, whether it's a farmer or a student or a business person. And that happening will, I foresee that should continue for quite a while. India so credit starved.
I have a broader question, and this relates to the impact of monetary policy on a supply side distortionary impact on inflation, what we are seeing in India. And one of the concerns that has been expressed is that while it may control prices to some extent, it will also have the potential of stalling the recovery that has happened so far.
It does work, of course, in terms of monetary policy. That's why monetary policy, they tighten it when inflation goes up. I'm sure there are some functions that are working there, but overall credit demand, I think is improving. If you see the numbers, FY22 credit was higher than FY21. I do see that trend improving, and particularly the balance sheets of banks are very, very clean. Not just our bank, I'd say that generally the banking system, because everybody is provided for whatever problems. So strong balance sheet, strong capital position of banks, I think it augurs well for the Indian economy.
Let me turn to another broader aspect, and we've seen significant cleanups, a cycle in banking really. And some people say that the cycle has changed decisively, and the banking sector is now in a position to support economic growth. What are your own views?
Well, there's no doubt at all in my mind that the banking system's credit the books are quite clean. During last 4-5 years, I think banks have worked at it, and I can assure you at our bank for sure, we are in a very good shape. There are no more legacy accounts that are going to become NPA. Either it's already become NPA or already provided. So all legacy issues are sorted. At least certainly at our bank, you can expect that from now on you will get to see growth, and that's because the base is all clean.
Let me hop to another subject, and this is a completely different one in some ways. The subject of startups. India, very large startup ecosystem now, and a lot of expectations and hype there. Do you think it's going to be sustainable as we go ahead?
I am very bullish about that ecosystem of our country, and very proud that our country has put it together. We know the numbers of the unicorns that got created and all that, but issues not unicorns. Even if you go below and below and below, there's a large chain of thing happening there. The main reason is because that India has set up a really good payment architecture through UPI, and now there are so many newer tools that are now coming about in the ecosystem, which is basically the bureau and the account aggregator and ability to scrape information, and of course AI, ML, mobile phone, telephone, Aadhaar. The whole capability has come together, and that is the reason I believe that startup will continue to grow.
Where do you see the institution in 3 years from now?
The thing that about our bank is that our customer products are really very, very customer friendly products. So if any of your viewers are listening to the program, you can check your own banks. You're probably getting 3% on savings account on an interest rate on your current bank. Siddharth, I don't know where your bank is, which bank you have, but our bank is paying a minimum of 4% on savings rates. So it's money. You should leave it on the table, and then there is and of course on higher slabs we pay more. So you get better interest rates. Our customer friendliness is very high, and we pay monthly credits on credit card. We have so many benefits. So we believe really with good products on the side and with good profitability that's coming up in the next 3 years, we believe that our operating profit can compound by anywhere between 40 to 45% every year now for the next two years for is that our eyes can see. So that augurs actually for the next 3 years is what we have predicted or projected. So that all augurs very well for the profitability of the bank. So at least we are very proud about the way the bank is coming up.
My next question is a personal one, but it's also significant. I don't know how many of our viewers really know that you've actually sold your shares to give as gifts, basically to help your staff out. Where did that come from? And would you like to speak about it a bit?
Well, I normally don't speak much about that. You could excuse me. I just think that that there's some stock I have. So if anybody needs help, I just transfer it. That's all. I mean, I don't want to comment much on that.
Finally, as we wind down this conversation, I want to come back to a topic that we had touched upon earlier, and this is consumer worries. So they are also impacted by inflation, and a certain class of consumer is also worried that now, as a consequence of tightening, they will see their loans becoming costlier. Is that something that will have a broader impact in the quarters ahead?
I told you there is still a strong demand. Maybe there'll be some dampening, but I don't see that as a major issue, because many of our bank is certainly coming from a small base. And when you're coming from a small base, whether Indian credit system grows by 8 or 9 or 10, that doesn't affect our life, because we are starting off from a very, we can grow at 25%. Now, and as far as the second point about the customer behavior is concerned, I think should be okay. People do get used to interest rate cycles going up 100 basis points, going down 100 basis points. People will get used to it.
All right, we'll leave it there. Thank you very much. Always a pleasure talking to you, Mr. Vaidyanathan, and look forward to discussing banking and the broader economy with you in the future. With that, it's a wrap on this conversation. If you've been, thank you very much for watching.
Thank you so much, Siddharth. Nice speaking to you.